investment in green energy we've seen. Obviously, the infrastructure bill as well as the reconciliation bill. When you look at this, the severity of what we're dealing with right now, what do you see is the most critical tool that's needed to tackle the climate crisis? And on the flip side, what are you willing to part with in order to get the bill across the line?
Well, let me just say, I think there's two long poles in the tent, if you will, in the president's Build Back Better agenda. One is the Clean Electricity Performance Program, or CEPP, that incentivizes utilities to be able to do the build out of the clean electricity that we need, adding renewables, adding clean energy to the grid. The second is, and so that's really on the demand side. And on the supply side, it is really the tax credits associated with rewarding the private sector for doing that build out. So both sides are necessary to be able to get to these really aggressive goals of 100% clean electricity by 2035. You know, with respect to what we're willing to give up, I'm not going to say at this point, because I think the president really wants it all to happen. Obviously, this is nested in the context of other pieces of his agenda, which are really good for the economies, but particularly the economy of middle class and working class folks. So he's still pushing for it all to happen, and we'll see how it shakes out in negotiations.
On the issue of clean energy, you recently laid out a blueprint that points to 40% of the country's electricity being powered by solar by 2035. If I have my numbers correct, it's at 4% right now in terms of solar and what it amounts to in the electricity grid. How do you get to 40%? And are the investments that are set aside through these two bills enough to get you there?
Yes, the investments would get us there. We have to be aggressive. There is no doubt about it. We have to add 17 gigawatts of solar if we are to get there. Now, remember, this study talked about what the capacity was if the right policy instruments are in place. We can do this. And we would get to the number of 100% clean electricity by 2035 if we have the right policy pieces in place. So this is called the Solar Futures Study. It was done by the National Renewable Energy Lab. But the policy pieces that Congress is considering are clearly necessary to make this happen, because we are just not at the level we need to be. We are just not, especially given the urgency of the moment that we just started this conversation with.
Specifically on the issue of solar, can you get to that 40% without bringing much of the manufacturing back home to the US? The big question, of course, is this reliance on Chinese suppliers when you consider how much of the solar supply chain that they control.
This is such a good question. The president wants to establish a full supply chain for solar, for wind, for all of these clean energy technologies in the United States. By 2030, there is going to be a $23 trillion market at a minimum for the products that reduce carbon pollution. And that means solar, that means wind, et cetera. We could stand by and say, you know, we're going to allow other countries to develop those supply chains and we'll just buy from them. Or we can get in the game and create the right policy incentives for those supply chains to be located here. We are up against other countries who are competing tooth and nail for this market, and we've got to get in there and compete too. We do it differently. Other countries may have state-owned enterprises that they are subsidizing to be able to do this. We, on our end, may have tax credits that help to be public-private partnership type of a framework that would allow for the supply chains to be here. The president is committed to creating full supply chains in this country to put our people to work. He's completely obsessed with creating jobs in this clean energy economy, good paying jobs, family sustaining wages, and he wants to use this clean energy sector and the opportunity it presents to be able to do that in the United States.
There is the question about how you incentivize change for the biggest polluters, which of course are the oil and gas companies. There was a new study that came out from the Carbon Tracker Initiative that pointed to the fact that the world's largest energy producers are still investing in a way that is inconsistent with the goals of the Paris Climate Agreement. How are you thinking about that piece? Is a carbon tax the most effective tool in getting the oil and gas majors on board with the larger climate goals the Biden administration has put forward?
We think the most effective tool is the one that we have laid out, which is to incentivize the utilities to purchase the right ingredients to be able to get to that clean electricity goal. But I understand certainly that a carbon tax is something people have been talking about for a long time. It's just not this administration's preferred way of moving. However, I will say this. You know, I'm as Secretary of Energy. The Department of Energy oversees 17 national laboratories. These laboratories are working on the solutions to remove carbon pollution from fossil fuels. And so those solutions, whether it's carbon capture and sequestration, whether it's using clean hydrogen to decarbonize the hard to decarbonize sectors, we know that we have technologies that will be able to do this. This is why the bipartisan infrastructure bill, which funds a lot of demonstration projects in those technology areas, is so critical. It's not just the US that wants to decarbonize the fossil fuel industry, it's the entire world. And that industry has actually, I mean, while they're, you know, they are seeing where the puck is going, as we say in Michigan, they should skate to where the puck is going. And that's why they have often, many of them have set, you know, zero carbon goals by 2050 as well. But we have to make sure that their feet is held to the fire, that their products will be much more in demand if they're able to decarbonize, maybe attaching net carbon negative technologies to their extraction. But the bottom line is technology is there. We want to make sure it's used, and we want to make sure we've got reliable, clean baseload power as well as reliable renewables, which means we've got to invest more in batteries as well.
We've seen the recent disasters really show the inequities that come with climate change. Low-income communities disproportionately affected by the floods here in the Northeast. Obviously, the same played out over in the South as well with the hurricanes. And yet there are fears that those same communities are going to be left behind in this green transition. You know, some would argue not everybody can afford an EV. The charging stations aren't necessarily in those communities right now. How do you ensure that this transition is more equitable?
It's a great question too, because the president has set forth a Justice 40 initiative, which is in this climate space, meaning 40% of the benefits of these investments have to go to communities that are either in transition, perhaps they're fossil communities, coal communities, power plant communities that are seeing their jobs leave, or they are frontline communities who get hit first and worst, and who are in the shadows of smokestacks and whose kids have asthma, for example. So this is why the president's goal, for example, on electric vehicles, he wants to allow, and this is the infrastructure bill, funding for 250,000 charging stations. We don't want to put those charging stations in places that already have them, in communities that can already afford them. We want to put them in places where they don't already exist, so that those communities can then feel more comfortable in being able to buy electric vehicles. And on the electric vehicle side, we want to bring down the cost of electric vehicles to be comparable with that of gas-powered engines. And so in that reconciliation bill, what's being discussed right now is the president's goal of an upfront tax credit where you can get it right at the dealer, so you can compare right there and have that cost lowered right away, so that we can see more spread and uptake in electric vehicles in communities that up to this point have not felt comfortable doing so.
And our thanks to Energy Secretary Jennifer Granholm for that conversation. I want to turn our attention back to the markets right now. We are seeing those losses deepen here in the afternoon session. The Dow now down nearly 2%. Let's bring in Yahoo Finance's Inez Ferre, who's tracking the market action for us. Inez.
And Akiko, we are at the lows of this session right now. We're seeing also the NASDAQ down more than 2%. We are looking at the sectors on the S&P 500, all of them now being in the red. You've got energy and financials, which are losing the most, as well as materials. You're also seeing some industrials getting hit. So if we take a look at the big Dow decliners, besides the financials, we're also seeing Caterpillar down more than 4%. Iron ore prices, those have been on a decline. On Friday, they fell below $100 a ton. China has some restrictions in some provinces, also a downturn in the property industry there. So mining shares are lower. Some of the big machinery makers like Caterpillar are also lower because of that. We're also taking a look at China Evergrande Group. That's been trading in Hong Kong, plunging 10% today. This is a property developer struggling with its debt. This has been going on for weeks with suppliers saying that they haven't been paid. The stock is at a 52-week low. Year to date, it's down more than 80%. I want to also show you what's happening with oil because WTI has been down about 2% today. Brent crude down more than 1.5%, trading below $75 a barrel. You have the US dollar index that's been rallying. It's been having an effect on oil prices. You also have less production output in the Gulf because of the recent hurricanes. Shell has been having some problems with productions in the area. So we're also seeing some of the oil companies, Chevron, Occidental Petroleum, all of those lower. Akiko?
Okay, an ugly, ugly day out there today. I appreciate you staying on top of it. Inez Ferre bringing us the very latest on the market action. Coming up, we are talking about the race to 2035. General Motors set to phase out all gas-powered vehicles in the next 15 years, but will supply chain challenges delay the timeline? A conversation with the company on the other side. We'll be right back. General Motors is undergoing a seismic shift, aiming to phase out all gas-powered vehicles by 2035. But the recent recall of its all-electric Chevy Bolt, as well as some supply chain constraints, raising concerns about whether that timeline could be in jeopardy. Let's bring in Geraldine Barnuevo. She is GM Senior Manager of Environmental Strategies and Sustainability. Geraldine, it's great to have you on today. Let's look at the numbers here. 2035, the big goal GM has set out, 30 new EVs by then. Some would argue that GM's kind of hit some stumbles out of the gate here with the most recent recall of the Chevy Bolt. This comes as the company's trying to convince Americans to get on board with all EVs. How do you build that trust with your customers to say this is the way of the future and this is the transition that needs to happen?
Thank you, Akiko, and good afternoon. Well, GM is taking both inside and outside our fence lines actions to reduce our own emissions and become more resilient. We started our upfront commitment to fight climate change in 2017 when we announced our vision for a zero crashes, zero emissions, and zero congestion world. And this year, we are advancing our zero emissions visions with a plan to become carbon neutral in our global products and operations by 2040. That plan is aligned with our science-based targets and this ambition to limit global reduction by 1.5 degrees. As you mentioned, we have this goal of putting 30 EVs in the road by 2025. And many of those EVs use our new proprietary technology, the Ultium platform, that will help us to really transform the future of mobility. It's important to mention that the problem that we have with the Volt EV is a manufacturing problem with the battery. The battery we're working with our supplier, LG Chem, with whom we have partnered in our joint venture to build the Ultium battery. But ultimately, the important thing to be aware is that our new vehicles are going to be using this Ultium battery, which is different to the one being currently used in our Volt EV products.
So the message here from GM being that the problems you're having with the Bolt aren't necessarily indicative of the other EVs that are about to roll out.
That is correct.
Let's talk about some of those partnerships that you just mentioned. The partnership with LG Chem, you've got a few battery plants in the works here. How much of this 2035 goal is contingent on GM being able to control the supply chain? Because as we've learned over the last year, one hiccup could lead to a ripple effect in terms of delays and deadlines across the auto sector.
Well, the Ultium platform, including the battery cells, the modules, and the packs, were mostly designed and developed in-house. And it's the only EV technology that truly developed for a full-scale electric mobility. Indeed, our Ultium platform, we consider that our secret weapon in the fight for high performance and also reduce cost, both which will increase the EV adoption. The other differentiator about the Ultium platform is that it's very versatile and flexible. So it will help us to quickly ramp up EV production and achieve economies of scale. As you mentioned, and I mentioned before, we will build our batteries at the Ultium LLC facilities in the US, which will give us control over that manufacturing. We will bring our manufacturing expertise as GM with all the quality to manufacture those batteries. And we will mass produce Ultium battery cells for the electric vehicles in the US and create thousands of new jobs. So we have announced to our second generation Ultium chemistry battery, which will deliver twice the energy with 60% less cost than today's chemistry.
The vehicle itself, of course, is just one piece to a larger infrastructure that needs to build out in order for this low carbon transition to take effect. Can you talk a bit more about the conversations GM's having with the companies that are building out the charging stations, with the cities that need to ensure that this is all in place so GM can go to the customers and say, look, you don't have to go searching for a charging station. They are available in some areas that just don't have one right now, or they will be available.
Yeah, charging infrastructure plays a major role in the mass market adoption of EVs. And for that reason, we're working very close with companies like EVgo. We will expand. We have an agreement to expand the EV charging in the US by 2,700 fast charges in cities and suburbs by the end of 2025. And I'm happy to inform that we are on our way to achieve that goal. We will have around 500 fast charging stalls live by the end of 2025. So we also introduced the Ultimum Charge 360, which is a holistic charging approach that integrates charging networks, GM, vehicle, mobile apps, and other products to simplify the overall charging experience. And we have signed agreements with 7 major EV charging providers to leverage their charging data within the GM vehicle mobile app. What that is going to mean is that the customer will have access to 60,000 charging blocks throughout the US and Canada.
Geraldine Barnuevo, GM Senior Manager of Environmental Strategies and Sustainability. It's good to have you on the show today. I appreciate the time. Coming up, the rise of ESG investing. We're going to have a live report for the 2021 Concordia Summit right here in New York City. I'll speak to one of the top venture capitalists also in the green energy space. All of that is coming up after this short break. The annual Concordia Summit aims to bring together some of the biggest names in politics and business as they try to tackle some of those most urgent issues facing the globe. Our very own Julie Hyman on the ground for us. And Julie, I know this always happens kind of in tandem with the UN General Assembly meeting here. How big of an issue is climate? What are you hearing on the ground there?
Well, you know, it does happen in tandem with the UN General Assembly. A little bit of a difference here is that the leaders are from all different sectors, and the aim is to sort of focus on public-private partnerships and ways that different stakeholders can work together to make big change happen. And there's a lot of climate programming sort of sprinkled within the 3 days of programming that we're seeing here. But the idea of sustainability here, as I've seen it illustrated, is sort of bigger than just climate. There's the issues of economic sustainability, for example, that are also very much front and center now. Right now, in fact, I think there are chimes sounding behind me to mark the beginning of the next speaker, and he's going to be talking about activism and getting young people involved in climate climate change movements through things like music, for example. So that panel about to happen. Later in the week, we're going to hear about the role of corporations in promoting biodiversity, which is not something you necessarily think about very often in terms of corporations having that kind of role. But there's going to be a representative of Walmart who's going to be speaking on that topic. And we're also going to talk about the rise of sustainable fashion. Petra Nemkova, is going to be leading that panel a little bit later in the week. But as I say, there's a lot of the sort of intersection of all of these different issues that are talked about here, and sort of improving things for stakeholders overall. And of course, climate is an intrinsic part of that, particularly when you're talking about the developing world, where many of the people here are either based or where their efforts are focused. Akiko, and I know you're going to be here, I think, virtually later in the week as well on a panel.
I certainly will be, Julie. Increasingly, climate's sort of more difficult to separate from so many different topics, but we're going to be looking out for your coverage all day there from the Concordia Summit. Well, concerns around the impact of climate change have helped fuel a record $11 billion in climate tech deals so far this year. Our next guest is a Hawaii-based venture capitalist who just launched a new climate technology fund backed by billionaire heavyweights like Tom Steyer. Elemental Accelerator founder and CEO Don Lippert joining us now. Don, congratulations on this launch. This is certainly a big one in a year filled with huge climate tech deals. Talk to me about how your fund is differentiating itself from some of the other ones.
Thanks so much for having me, Akiko. And we are so excited about the momentum this year in investing in climate technology, really on track to beat last year by a long ways. It's very exciting to see the entrepreneurs coming into the space. So Earthshot Ventures, as you mentioned, is spinning out of our nonprofit Elemental Accelerator, which operates globally. And one of the key differences is that at Elemental, we've funded over 110 entrepreneurs and startups to not only grow their companies, but to actually deploy projects in local communities. And so it's this network of entrepreneurs, the 2,000 co-investors that we've invested with over the last 12 years, they give us really amazing intel into what's actually working on the ground. And that helps inform what might make the best climate investment for the future.
So what are some of the best investments? What is the technology that you're helping deploy now?
We're really excited about technology in a number of sectors. Earthshot Ventures invests across energy, mobility, food and agriculture, and industry and carbon. So really all of the sectors that impact our current emissions and our future climate crisis. We're excited about technologies that intersect in between those sectors and that bring new kinds of technology into them. So you mentioned that we have, Tom Steyer is one of our investors. We have John Doerr, Chris Cox from Facebook, Emerson Collective, Microsoft. So we have a lot of really amazing and deep technology expertise and talent at the table, and mixing that. So, artificial intelligence, machine learning, mixing these kinds of technologies with what we're seeing on the climate side needs to be solved can be really powerful drivers of change. So we're excited about technologies across all of those sectors.
You're also unique in that you're based out of Hawaii. We often talk about VCs that are based in the Valley. Talk to me a bit about the impact you have seen from climate on the ground there and how that has helped shape your priorities in terms of where you think the money needs to flow.
Sure. And you said, we need a lot of money in this sector. We need over $2 trillion to address the climate crisis. So, Earthshot Ventures with our $60 million first close, we're a piece of that, but our goal is to be really catalytic and bringing other financiers and other capital to the table as well. We have a presence in the Bay Area. And as you say, I'm based in Honolulu, so we have a Hawaii presence as well. And one of the things that we've seen on the ground in Hawaii is that we will be able to move much faster and more effectively together if we really involve people across our community. So at Elemental, we've deployed projects across frontline communities, we've deployed projects globally, and really try to understand what it takes to help scale climate technology. We like to think of it that, the innovation and coming up with something new is about half the battle, but actually being able to deploy it on the ground, scale it up, bring it into people's homes, businesses, schools, and streets, that's the other half. So really understanding both parts of that equation is where we live and breathe and where we love to invest in entrepreneurs that share that passion.
And Don, increasingly, we have heard those like President Biden. We heard from Energy Secretary Jennifer Granholm there earlier saying that innovation is such a big part of tackling this. And you know that you've been in this space, but I wonder how you're looking at the role of the private sector in tackling this. Do you see increasingly a partnership with governments, with lawmakers, or do you see the innovation separate from that? How are you looking at the overall structure?
I would say innovation is absolutely a piece of this overall structure. We've actually worked really hard to bring innovation closer to policymakers and bring the proof points and things that we're learning on the ground closer to policy so that we start really closing that gap between technology and policy. We have some incredible tailwinds at our back right now in climate. And in the 15 years that I've been in this space, it is the most exciting time with the most momentum and stars aligned across the public and private sectors to make real progress. So that gives me a lot of reason for optimism. We saw, earlier today, another 86 companies joining the climate pledge. It brings it to over 200 companies joining the climate pledge. Microsoft, one of our limited partners in the fund, has a carbon negative pledge by 2030. So we're seeing enormous private sector movement into this space in a really durable and at scale way that we haven't really seen in the past. At the same time, we're seeing alignment on the public sector and government from local, state, national, and international players that is driving toward climate action. So we need absolutely more on both fronts. We need public and private sector working together in sync to do the things that they each do really, really well to be effective here. But we're really excited about that alignment. And then finally, what that means for this innovation space is that we're seeing a mountain of talent that we have never seen before in the 15 years I've been doing this, coming in from the traditional tech world, from traditional product, from Netflix, Google, Facebook, people who see what's happening in climate and want to be part of tackling it.
Yeah, well, if the $11 billion we've seen so far in the space is any indication, there's going to be a lot of interest and money flowing in that direction. Don Lippert, Earthshot Ventures founding partner and Elemental Accelerator founder and CEO. Really appreciate the time today. Coming up, preparing for natural disaster, how Houston Mayor Sylvester Turner is preparing his city for the next major weather event. We're going to be talking to him directly. He'll be joining us after the break. We'll be right back.
At an inflection point, and that there's a real consensus real consensus that while the climate crisis poses an existential threat, there is a silver lining. The climate crisis also presents real and incredible economic opportunities to create jobs and lift up the standard of living for people around the world.
That was President Biden last week speaking about the climate-related disasters we have seen play out on the East Coast this year. Our next guest is no stranger to some of the extreme weather events we've seen with hurricanes as well as a deep freeze earlier this year, crippling his city. And he's now taking steps to ensure that his city is resilient while also working with other cities as the chair of the nationwide coalition of climate mayors. Let's bring in the mayor of Houston. We've got Sylvester Turner joining us today. Mayor, it's good to talk to you. In many ways, your tenure as mayor has really been defined by some of these natural disasters. You had Hurricane Harvey, you had the deep freeze that happened earlier this year, you had Tropical Storm Imelda. When you look at the totality of these events, how have they shaped your priorities as mayor?
Well, as you said, we've faced 6 500-year floods in the last 5 years. Which means that the focus has to be on resilience and sustainability. And these storms are coming with greater frequency, greater intensity, and they're costing more. And so as a result of that, in February of last year, we put forth our Resilient Houston Plan, 18 goals with 62 strategies. On Earth Day last year, the energy capital of the world, we put forth our Climate Action Plan on Earth Day. We are now all of our city facilities are 100% powered by renewables. We utilize more renewables than any other city in the country. And the EPA has noted the fact that we are utilizing more renewables, 100% of our buildings, 100% powered by renewables. We're focused now on climate tech, clean tech. I'm pleased to say that Greentown Labs has expanded from the Boston area, now in the city of Houston, and the goal is to put in place 50 2.0 clean energy companies by 2025, and we are well on that mark. And we're utilizing more green stormwater infrastructure.
No question these investments are necessary, but some would argue that that's more of a midterm, long-term goal. When you've got as you said, once in a century type storms already coming through the city. How do you build out resilience looking at the short term when you've got these storms coming through while also keeping your eye on the ball long term?
Well, it is a short term, medium and long term plan. In the short term, of course, we're building higher. We are not wanting to build in the 100-year floodplain, for example. And so we're moving people out of those areas, and then we're reluctant to do any sort of building in the 100-year floodplain. So we're building higher. We are putting in place more detention. We recognize that these storms are going to come. And we are the bayou city, so we are expanding the capacity within our bayous. We're providing more detention in our areas. Those things we're doing. We've already instituted our green stormwater infrastructure, and we're providing more incentives. Parks and green space we're utilizing to serve as areas that can serve a dual purpose. All of these things are intended to help out in the short term, but in the long term, we've got to change the way we have been doing things in the past. And that's where we are partnering with the energy sector. We're not trying to move away, but we are trying to work to move the energy sector forward. You just heard last week, 11 companies principally located in the city of Houston have been talking about carbon capture and utilization and storage. So there are a number of things that we're doing with a number of partners in order to move this city forward and get us prepared for the future.
What's been the financial impact, and how does it compare to years past when you think about the direct financial risk that these extreme events now pose to the city of Houston?
It's been billions. For example, when I came into office, 4 months into office, we faced the tax day flood in April. That was a 500-year storm. It cost quite a bit. The next year was Hurricane Harvey, billions of dollars. More rain fell on this city than any other city on the North American continent. You mentioned Tropical Storm Imelda in 2019, but the big one, of course, was the Winter Storm Uri that took place in February of this year. That cost billions, and about 200 people lost their lives in the state of Texas. So there is no question that these storms are coming with greater frequency, greater intensity, costing a lot more. That's not just in Houston or in Texas. That's happening all over the globe.
And Mayor, you mentioned the oil and gas industry. Obviously, big players in Houston historically have really driven the growth in your city. How do you think about the economic picture down the line here? On the one hand, you've got an industry that some would argue is going to be scaled down significantly. How big of a hit would that be to Houston? And how do you offset that with some of these other innovations, these other companies that you're talking about, you think are going to drive this push to a low carbon future?
Excellent question. In 1901, when oil and gas was discovered, we talked about fossil fuels, oil and gas. And now we've evolved where we talk about the energy industry. A part of the climate action plan that we put forth on Earth Day last year is to focus not just on the energy capital of the world, but for the city of Houston, for example, to lead in energy transition. And we're working in partnership, in tandem with the energy sector. So you have a lot of conversation that's been talked about around carbon capture, utilization, and storage, about using clean hydrogen, about the use of more renewables. Quite frankly, the city of Houston, with all of our facilities now being powered by renewables, we're working in collaboration with NRG on that. We're taking one of our landfills, 240 acres, been around for 50 years, standing still. We're looking at utilizing that and turning that into the largest urban solar farm in the country, enough to power 5,000 homes, take 120 million pounds of carbon out of the air, and will transform that low-income community even further better. So it's about working in tandem, working in partnership, but recognizing that if we are going to achieve the goals, the Paris Agreement goals, we need the energy industry to be at the table.
And finally, Mayor, I wonder if you can speak to the impact to the community. We had President Biden earlier this year issuing an executive order calling for a study on the impact of climate migration breakdown. Yes. And I know that your city took in a lot of people who were displaced by Hurricane Katrina, but you've also lost some residents who've moved out of Houston. When you think about the impact of these extreme weather events, how has that changed the makeup of your city?
Well, let me tell you, climate migration is real. As chair of the U.S. Climate Mayors, as board chair of the Global Resilient Cities Network, we talk about climate migration, which is taking place again all over the world. And of course, we're experiencing here right here in the city of Houston. And it is about equity. When you're talking about these storms that are coming with greater frequency and greater intensity, when you're even talking about the pandemic, many of the same people in these marginalized communities are the ones who are being impacted adversely over and over and over again. You can either build for failure, and what I mean by that, let's say there are multifamily developments in the floodway. Those people are being affected over and over again. You can't just rebuild those facilities in that same space. You have to move them out of danger and place them somewhere else. Otherwise, you're providing funding for failure. We've got to get away from that sort of philosophy and that sort of funding. And now we have to place people in safer spaces. And then we have to focus on infrastructure resilience, climate tech, all of those things that will help us to not repeat the same mistakes, because these storms are not waiting for us to move. We are going to have to move ourselves in policy and the way we finance our infrastructure.
Houston Mayor Sylvester Turner, I know you've got a lot on your plate today, but really appreciate you making the time for us. Good to talk to you today. Well, from the local impact of climate to the financial risk, let's bring in Simon Fishweiker, head of corporation and supply chains for CDP North America. And Simon, of course, we've been watching this space. We talk so much about the environmental impact, but so many companies now under pressure from shareholders to disclose their climate risk because of concerns around some of these extreme weather events and the impact that's likely to have on supply chains. How have you seen that risk evolve?
Well, I think the risk has always been there. What's evolving is awareness from the investment community as well as businesses and their supply chains. CDP now has over 590 institutional investors who are calling on the largest publicly traded companies in the world to disclose through our climate, forest, and water security questionnaires. And that's resulting in thousands of companies beginning to report on this information, including 75% of the S&P 500. So the risk has been there, but I think it's now waking up to that risk and really pushing on business to disclose information.
What's provided the wake-up call?
Well, I think you've heard about the natural disasters that are really driving attention there, but I think some of the data out there really illustrates that our data shows there's over $1 trillion at risk from climate change, and that's I think a smaller number than the reality. But I think capital markets also wake up to the positive side as well, and that same data showing that there's up to $2 trillion in low carbon opportunities for those companies that lean in. So I think the combination of the amount of money at risk and related to climate and the physical risk, the flooding, wildfires, hurricanes is one side of the coin, but we can't forget the enormous opportunities from the low carbon transition, shifting business models, new products and services. So I think that's really driving a lot of the attention as well.
What does this transition specifically mean about how companies approach their supply chains, how they map things out? Is it about bringing things a little closer to home? Is it about building out resilience?
Great question, and I'm really glad that you're focusing on the supply chain angle. CDP's data has actually demonstrated that on average for companies, the emissions in the supply chain are 11.4 times higher than their direct operational emissions. So I think the first step is really gathering that awareness of the risks and opportunities in your supply chain. And businesses are just beginning to do that. But then I think it's also collaboration. And so many of the large corporations we work with have set targets for their own emissions and then work with their suppliers to set similar targets for their emissions. Or if they're focused on water security issues, they may be working with their suppliers to drive greater WASH standards in local areas where water security may be a major issue. So, some of that could be shifting supply chains, but I think for the most part to date, a lot of that is working closely with your suppliers as partners to drive environmental action collaboratively.
Simon Fishweiker, head of corporations and supply chains for CDP North America. I appreciate you making the time today. Coming up, clearing the world's oceans of plastic. One organization's aiming to do that by deploying ships to collect the waste, but what do you do with all of the plastic collected? Ocean Cleanup founder Boyan Slat's going to be joining us after this break. Welcome back to our hour-long special Planet Earth in Crisis. Plastic is expected to outnumber fish in the world's oceans by the middle of this century if the current rate of waste continues. That's according to a study by the World Economic Forum. Well, there is one nonprofit group that is hoping to change that through a global cleanup project. Let's bring in Boyan Slat. He is the founder of Ocean Cleanup. And Boyan, let's first establish where you are, because I know you're out on the water right now. Talk to me about the mission at hand and where you're conducting it.
Yeah, so I'm here on top of one of our interceptors, which is a solar-powered device which we put into the mouth of rivers to catch plastic before it enters the oceans. So this one particularly is in Santo Domingo in the Dominican Republic, and we have 3 others operational. But ultimately, we hope to expand this to more than 1,000 rivers around the world to stop it from going into the ocean.
You've got an ambitious task, trying to rid the world's waters of plastic waste. We've heard of these massive garbage patches that have formed. How do you go about cleaning that up? And how is your approach different than others we've seen try?
Yeah, so our strategy is really twofold. On one hand, stop the source, preventing more plastic from going into the oceans in rivers. But at the same time, there's already a lot of legacy plastic in the ocean, especially this Great Pacific Garbage Patch between Hawaii and California. It's massive, and it doesn't go away by itself. So we have to clean that up. So for that, we've really developed the first scalable technology to do this, both on the ocean as well as in the rivers.
How exactly does that technology work?
So if you look at coastlines are actually very effective ways of catching plastic. You know, if you see it on the beach, it's out of the ocean, stays out of the ocean. So that's great, actually. But the problem is that in the middle of the ocean, there are no coastlines to collect the plastic. So that's why we say, why don't we build our own coastlines? So basically, we've developed very long floating barriers that we drag through the patch, and it catches and then concentrates the plastic before we can take it out. And we're now trialing the latest iteration of that technology as we speak in the garbage patch. Mm-hmm. And if everything goes well, in a few weeks from now, we hope to see a system completely filled with plastic. And if that works, I think we can with confidence say that the technology works and we can scale this up.
Boyan, you've got some critics out there about the way in which you're approaching that. Of course, you've gotten funding from companies like Coca-Cola, which are among the biggest plastic polluters in the world. And you're also out on a ship that some would argue is using fossil fuels. So how do you respond to that? And why partner with the very companies that are responsible for the pollution?
Yeah, well, so it's very hard to go to the middle of the ocean and clean this up without using fuels. Batteries are just not good enough for that yet. So we do use fuels, but at the same time, we're experimenting with low carbon biofuels, and all the rest of the emissions will be offset. So the cleanup will be carbon neutral. At the same time, of course, when you look at the rivers and funding that, yes, there have been companies involved like Coca-Cola, besides actually the majority being philanthropic money. I think there's 2 ways to look at it. Either you look at it from a greenwashing lens, but the way I look at it is that it's a pragmatic way to scale this up. I mean, companies like Coca-Cola, they don't want the ocean to be polluted with plastic. So by allowing them to solve this problem by cleaning up their own waste, I think if anyone should be paying for this cleanup, it's companies like Coca-Cola.
Ocean Cleanup founder Boyan Slat joining us from the field. Really appreciate the time, and of course encourage our viewers to go to their site to learn much more about the project. That does it for our hour-long special here on Yahoo Finance, Planet Earth in Crisis. Appreciate you joining us today. Much more coverage to come here on Yahoo Finance Live. Keep it right here.
Christophorus, and here's what's happening. Stocks tumbled right out of the gate this morning, and they haven't looked back since. Investors were rattled by news that the major Chinese real estate developer Evergrande is close to collapsing under a mountain of debt, and now they are left to wonder if that could have a devastating ripple effect across global markets. The House and Senate are back in session this week, just days before a potential government shutdown and possible government debt default. Meantime, President Biden will be in New York City today to address the United Nations, where climate change and expanding access to COVID-19 vaccines will dominate the agenda. And Pfizer says its COVID-19 vaccine works for kids ages 5 to 11, and it plans to seek U.S. emergency authorization for that age group very soon. The need is urgent. Children now account for more than 1 in 5 new cases, and the highly contagious Delta variant have sent more kids into hospitals and intensive care units in the past few weeks than at any other time in the pandemic. Want to get back, though, to the markets and a closer look at that sell-off, because stocks are now near their worst levels of the day, with all 3 major indexes down 2% or more. The Dow off more than 760 points. The S&P 500 down nearly 100. And the NASDAQ Composite, the biggest loser today on a percentage basis, down now nearly 2 3/4% or more than 400 points. Let's take a look at the Asia market.